Welcome back, or just welcome. This is your first time here. Welcome to the land of craziness, tariffs, malevolence, media, mayhem. It's all going on. 1,000 point drops, just volatility. Oh my God, what are we gonna do? We're gonna sit back and we're gonna make a plan. We're gonna stick to the plan and we're gonna find our way out of the hole. That is, if you're in a hole. I'm in a hole. Didn't necessarily think it was going to happen like this, but it did. So we work on getting out of it. That's all. Step at a time, step at a time. So let's go to it. So we got price chart. We got price plotted out. Nothing else yet. And we can just kind of look at what price did. And what did price do? Price was looking pretty good today until they closed the market and then dropped it like a rock. But let's put some fibs up. See what that has to do. Now we got a 5-minute chart and we're putting up the daily fibs. Why? Because I was sold on a bounce somewhere in this neighborhood, a 200% daily fib, and sure as heck did bounce to the upside nicely. Of course it dropped like a stone, man. It's just friggin' woof. Need a parachute for something like this. But anyway, so that's a daily fib, and we'll go back to the 5-minute. We'll just keep the 5 minutes up and look for confluence and all sorts of other things. So hopefully give us some signals about what's going to be coming up. All right. So we got two sets of 5-minute fibs. We have the old set. Remember the 261.8 that I was basically, 261.8, 261.8. That was a pretty good area to get in. You did drop a little bit below, and the 200% on the daily was below that, but there was roughly confluence for the two of those, and that was a good pivot point. And sure enough, it pivoted and went higher. When we look at the confluence, we have a 141.4% over here, ends up being a 23.6 over here. We have a 200% over here, ends up being a 50% over here. So we're getting some confluence going on. We have the 261.8, my favorite 261.8, becomes a 78.6 over here. And what does this big move to the downside end up being? 100% retracement. And it's grinding its way higher now. But it is going higher. That doesn't help all the people that just panicked and got out. I don't blame them at all. Who knows how far down it was going to go? I mean, it's just crazy, crazy. Okay, so where do we want to go from here? We want to figure out what the right-hand part of the chart is all about. And once again, I got a big gap on the right-hand side, so let me just take a moment here and adjust. I don't know why I keep doing 200 bars to the right. I'm just going to do one bar to the right. Okay. So that puts us up against the right-hand edge. Nobody knows what's going on over here. It's the future. But maybe we can find some clues and work with it. First things first. We'll put up the volume profile. All right. What's the volume profile showing us? Well, we had two naked virgin point of controls up here, but with the price action coming up like it did, it knocked out one of the virgin point of controls, naked virgin point of control. So we just got one up here. And at some point, price is going to want to come back up here and touch the naked virgin point of control. So that's something to look forward to as it works higher. Okay, that's naked virgin point of control. What else do we got going on here? Anything in particular? Well, we have a high degree of confluence here. We have a high value area marker, and we have the 141.4 fib, the old fib, and the new fib at 23.6. All three of them are basically confluent right here. So that's a pretty good ceiling right now. It did smash through earlier in the day, so you could even have a lot of confluence and price will still go where price is going to go. It's up to the buyers and the sellers to dictate which way the market's going to roll. But anyway, so what else? Well, I think I need my secret weapon. Not so secret. I've made a big case out of it, but I think it's a good deal. Once again, lazy bears anchored momentum. Oops. I'll just get set up here, so just bear with me. Okay. So we'll zoom in a little bit now, just because the anchor momentum doesn't really tell me too much here. It does tell me one thing. This was a hell of a drop. This thing's down at 2.5, negative 2.5. There's nothing else along this chart that's anything like that. That was a hell of a ride. Okay, let's zoom in. We'll take all of today. I should zoom in. I should say yesterday because we're now after midnight. And what do we got? Well, we start back here. It was before the market opened yesterday. Things were dipping down. Price was coming down pretty good. Then all of a sudden the market opened and bam, it reversed, going to the upside. And the slow line, the green line, stayed over the zero line here. So that was giving you a pretty good clue that you could stay in this trade and just roll with it. The problem is that it just got to a point where it was going to reverse again. But the anchor momentum's right on top of it. The red line crosses the green line to the downside. Then the red line crosses the zero line, and the green line crosses not too far after that. And grant you, that's into the move already, but I'm just saying, this thing's basically back underneath the zero line, and it's coming back around. What is it going to do? It does a round down, it's going to base, and then it's going to go higher again. And you're going to get too much too soon. I keep saying that because that's the way it appears to me. A bar like this is just too much too soon, and that's at the end of the day. That's just after 4 o'clock. What do they do? Push it up real high because they're going to bring it down hard. And boy, did it come down hard. I mean, look at the friggin' anchored momentum. Oof. That's all I can say. I'm at a loss for words. Usually not at a loss for words, but based on this price action, I'm at a loss for words. So it just price just collapsed, came down, and where's the red line cross the green line? The fast line crossing the slow line, right here. Where is that? That's pretty much the bottom. Because what did it do? It did a round down to a higher low, and then off it goes. And it's trying to chug, 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 trying to get back up. And that seems to be the one deal. Sell-offs happen fast, and building back up, building back to the upside, takes a lot of work, a lot of structure, a lot of building going on here. Accumulation too. Be accumulating down here low because they're going to want to drive it up and somehow get back up way up here, 20,071 to the The naked virgin point of control. But in the meantime, they got a lot of ground to cover and a lot of work to do. So what's the future telling us? The future's telling us not much. They're losing some momentum here. So it's going to come back down. And what does price want to do? Price wants to test twice. So it's going to want to test this pivot point here, this higher low. And it may not come down that low, but it's going to come down. It's not going to just keep going straight up, or in this case, kind of sideways up. Straight down, and then work like a dog trying to get back to the upside. So what else do we have? We could put up an EMA, the old 233, and take a look-see. But I'm not convinced that's going to be too helpful. I could be wrong, but I just want to keep stuff on the chart that really helps out. And EMAs, moving averages, they help. They can help. Just not in extreme situations. Because they're derivative. They're based on a moving average. An average needs price action in order to figure out what the average is. So what do we got? Well, sure enough, with the breakdown, we've got just a slow down, moving to the downside, 233. So price is going to want to work its way back up to the 233 also and get above it. Then come back down, solidify, and basically assure that it's not going back down below the 233, and then it'll work higher from there. So it's a step-by-step process. It's like the fibs. You're just walking up a ladder, you know? It's not that easy, but basically that's what I'm trying to get across. It's just hitting one resistance that then becomes support, going up to another resistance that then becomes support, and you're just working your way up, and away. All right. So what else we got? We got the EMAs. We got the volume profile. We got the momentum. Do I dare put on the inverted VIX? I don't know. The inverted VIX is going to have a heart attack, I think, trying to account for that drop. Let's put it up there just to take a look, see. I got time. The reason why I have time is we put all the work in up front with the charts, so you know where things stand. I don't have to go over various facets of the chart anymore. I can just look at what we're dealing with and basically make it a short, concise, hopefully concise, review of what's going on. Yeah, there you go. Well, what happens to the inverted VIX? The VIX shuts down at 4 o'clock, goes home with everybody else. Doesn't stay the whole 24 hours that the futures run. But the interesting thing is that the VIX starts at like 3:15 in the morning and starts painting, and then it finally kicks in. Then everything, the Bollinger Bands, the moving average, and the VIX itself, or the inverted VIX, starts up. And it does a good job. In some ways, it's doing a better job showing the movement to the downside on price than the vaunted anchored momentum is. So that's why you got to work with it as best as you can. And you know what? For as long as it's working here, it's doing a good job. It's working. So we use the inverted VIX and we use the anchor momentum. And we use all the lines that are up here. In some ways, I like to clean up the charts. We looked at the fibs. I could leave the fibs on. You can put the fibs back on after I'm done. So I'll probably do. But for now, no fibs. Let's just look at pure volume profile. And what is the volume profile showing us? You have this point of control here, and basically right below it, You have the low value area. These are basically projected from the prior period. And you know what? Doing a pretty good job of accounting for the fact that prices stabilized here, and then all of a sudden, bam, it's moving to the upside pretty good. Come down to the inverted VIX, and the inverted VIX is basically showing you coming down, coming down. You have a little bit of chop going on here, down at the bottom, and then all of a sudden, the inverted VIX crosses above the moving average, and it's off to the races, up, up, and away. Not bad, not bad. So we're 15 minutes in, which is a hell of a lot less than the hour and the 40 minutes and the 45 minutes that the previous videos were. So I'm basically looking at the fact that I think I've described enough. And as far as the right-hand edge goes and the future, I think as long as the anchor momentum basically stays above the zero line or somewhere near the zero line, if it dips down, it's going to kind of slowly work its way back up. It got hit hard. I mean, this is a beatdown. Shorts make their money fast. That's why you want to get your shorts on. That's what we can look at. I'm sitting here on the 5-minute like it's the only chart to look at. Let's look at a daily and a monthly. We got time, right? Do you have time? I've got time. Let's see now. We're going to tuck the EMAs back in for the moment. We're going to get rid of the volume profile for the moment. We'll leave the anchor momentum in the VIX, the inverted VIX. Just apply this. So we should have pure price up on top. Then we have the two indicators below. Now I'm going to go up and I'm going to pull out a daily. Let's go for a year daily. All right. Now, what are we looking at? We're looking at market hours. We're looking at extended hours, I should say. There we go. Okay. That's not showing the after hours. It's just showing that yesterday during the market hours was a good day. I mean, you're moving from like 200. Is that 200? That's 300 to 950. That's 650 points. That's pretty damn good. Until you get bushwhacked for 1,000 to the downside. What else do you got? You got divergence. You got the low here on the fast line on the anchor momentum. Then you got the low here on the anchor momentum fast line. And what do you have here? You got price, a low here, then you get a lower low here. So you're going down here, and you're going up here. That's a little positive bullish divergence. And sure enough, bam, kicks in pretty good. What'd it do though? Came to a lower high. We don't have the I'll put the lower highs are scary to me. I don't want that. What do I want? Oh, I do want that. I'm sorry. Extended hours. Okay. The other thing I don't like about extended hours is the market starts doing a little ramba samba, a little shake and bake. It's just frustrating. So look at that. That big move we had, it's just totally changed. Came in here, pushed up here, sold all the way back down. Now we got a little hammer candle down here at the bottom. So maybe things are going to turn around a little bit. But you know what? This was a lower high to here. I think we're going down. Got the slow line curving over the fast line. Or not over the fast line, I'm sorry. The the slow line just curving and not crossing the zero. It's not working its way up towards the zero. Then we're going down. That's what it looks like to me. I don't like to make pronouncements like that, especially when I find myself in a hole. But I'm just going to work out of it as best as I can, and I hope you do too. I would hope most of all that you didn't find yourself caught in this price action up front, and that you're just sitting on the sidelines watching what transpires and looking for your next opportunity. That would be best. And that's what I'm going to do. I focus purely on NQ, or I did on NQ, now on MNQ. Reduce my exposure to leverage. I mean, NQ, you're $20 a point. MNQ, you're $2 a point. So you got 10 times the leverage. That's why they call NQ the Widowmaker, I think. Because boy, that's a brutal game. You gotta really know, you gotta be on top of your game to be playing that one. Okay. So that's a daily. Now I want to go way out. I want to go to that 10-year monthly. And because it's MNQ, it's not painting the whole deal. So I'm going to put up NQ because it'll fill in the rest of the chart. There we go. What's it showing? It's just showing that we're going down. That's what these indicators are showing on a monthly chart. This anchor momentum. I mean, you've got the slow line, the green line, just ever so slightly in some respects compared to the fast line, the red line. But what's interesting is the red line's turning just a little bit. Maybe it doesn't go below the zero line. It goes below the zero line, and the green line's going to follow suit at some point. You're going to have another correction, at least. And what we don't have up here, which I said I'd start with every chart, is the channels. Auto channels. Let's apply that. Oh, got a log chart going. Got to get a regular chart. There we go. So what is it showing? Back here, just before the correction hit, you had price hitting the top of the channel. What do you have over here? Price hitting the top of the channel. The price needs to take a break. I mean, you have 2 years of just pretty much moving straight up. You had a summer of sell-off over here. This was the summer, right? Yeah. But you know what? It recovered and it pushed higher. But what does it do? I mean, the anchor momentum shows it's basically this is the top of the market here, and it pushed even higher. Look at this crazy freaking candle here. It was selling off here, which would have been a lot more natural, I think, because you hit the high here. But what did it do? Boom, the buyers came in and said, no, we're not done yet. We're going higher. Except that provides the perfect opportunity for the institutions to unload. They'll just feed as much as the retail wants to absorb and just push it higher until you get like a shooting star candle here. What the hell is the shooting star? Well, that's kind of a Japanese thing with candles. But to me, price pushed higher. The bulls were pushing, and the bears came in and said, no, we're done. Push it back down. Then you get a doji of sorts. Not a perfect doji, but it's enough. And then you start turning to the downside. Another situation where it tried pushing up again. Nope, coming back down. And then you got a big move to the downside. Last month was a pretty tough month to try and get anything bullish going on. I'll be straight up with you. I basically have a bullish bias. I don't know why. There's every reason why I shouldn't be bullish. But over time, and that's what this shows, this channel and price just show, price goes up over time. You just have to endure corrections. And ideally, you should be adapting. And that's why I keep trying to tell myself, I got to adapt to the situation. And the situation is get your shorts on. Bermuda shorts, bikini, I don't care what it is. Short, because that's the way the market's going. But it's not as easy as going long. And that's where I'm a little lazy, I guess. I'd like to think that I work hard, but you know what? I'm kind of lazy. So anyway, what else can we put up here? Let's take a look at an EMA for a second. We've looked at this before, but I want to just look at it again. What is it showing? It's showing that 233 is way below price. That shows you how strong the market is. It's not even getting close to price. What does it do? It sells off every once in a while. You have a correction, and it gets closer to the 233, but it doesn't come anywhere near going down to touch it. It turns around and takes off again. And when you get too far away, what does it do? It starts working back down, come close. Well, not close, but it come back down towards the 233. I don't know if I'm going to be able to do the volume profile, but we'll give it a shot and see what happens. Nah. I have to spend some time on that and see if I can actually get a volume profile that's out on a monthly. That would be pretty cool. But for our purposes, in our situation, it's not going to work. At least now, until I figure it out. What else can we do? We can do the adaptive flow, maybe. Let me check that out. Adaptive trend flow. You know, I'll take an aside here just for a moment. I think I mentioned in prior videos, use ThinkScript. Use ThinkScript.com. It's a forum. And basically, if you're using Thinkorswim charts like I am, you're going to want to get into ThinkScript a little bit because you want to customize what you're working with to your situation. I mean, if somebody hands you a hammer, you don't want to try and drill a screw in with a hammer. So what do you want to do? You want to turn the hammer into a hammer drill. Then you're putting in screws like they're going out of style. And that's what Use ThinkScript's all about. You can just ask all sorts of questions about different things that you're dealing with, and other people help out and basically just hook you up with information. That's a great site. It's usethinkscript.com. And this sounds like a commercial, but it's just me advocating for something that I think is a really good deal. And the moderators over there, Ben 10, Mary Day, and Use ThinkScript. I don't know why his handle is Use ThinkScript, but whatever. They do a really good job. And then there are people that are just awesome, just other people, users, you know, who use Thinkorswim. And we've got an adaptive flow up here. And what is it showing us? It's showing us basically the mean, which is the adaptive trend flow. And then I added on to it the standard deviations on either side. So I could see when stuff gets, stuff gets even outside of 3 standard deviations and it comes back in, but it gets outside. It's giving you a pretty good idea. Things are getting a little hot. They'll come back in. Not that much, and that shows you how strong it is because it just stays within the standard deviations. It doesn't even get back to the mean until here when you get into a little correction. and down it comes. Then it starts up again. Boom. Up and away. And we didn't even get, I mean, this was a stronger move here. Didn't even get into the channel part of the adaptive trend flow. This was a little bit more, sell off, work, sell off, work, and then boom, we're into a correction. Now, how much of a correction is it going to be? Well, we're probably going to find resistance on the mean now because it reverted to the mean. Instead of bouncing higher, it's gone below. So how low do we go? Well, we got like 18 and change, 18.2 to the first standard deviation here. And then I'm thinking, no, look at what the previous correction did. Came down to the lower channel. We're coming down the lower channel here. We're talking like 16,000. I mean, we're up at 19 and change right now. You know what I'm thinking? Get your shorts on. And I better get used to getting my shorts on because I'm not going to make any money trying to somehow do counter trend rallies to the upside. Buying the dips? I don't think so. Selling the rips, baby. Selling the rips. Okay. So that's the adaptive trend flow, which is pretty good on a monthly chart. But that's the other thing too. We're looking at a monthly chart. You just got to be very, very, very patient if you're gonna play a monthly chart. You just want to get clues from the monthly chart about how to proceed on a daily or a 5-minute or whatever. And that's what we're doing. Just getting clues. So I'm trying to think if there's anything else. Unfortunately, I haven't received any comments, any indication of anybody interested in basically giving me a ticker or something. I could put that up here and we could just go over it, you know. But if you have, a particular stock or a future that you're interested in, put it up. Just put a comment, below the video. Just say, hey, look at this. This is something you want to look at because this is something that I want to look at. And I do. I want to take a look. I'm interested. I may be solely focused on MNQ, but it's not like I don't look at other stuff. I mean, some facets of your life that could get you into trouble. Like with a lady friend, Like, hey, what are you doing? I'm just looking. It's like window shopping. I'm not buying. Somehow that doesn't fly, if you get my drift. You can't be looking around. If you're with somebody, you're with somebody. And if you're looking around, then you're not with that person. I don't know why I'm getting off topic here, but let's get back on topic. So that's the monthly. Just go back to the daily for a minute. We have the adaptive trend flow on just to see what's going on. We're down in the three standard deviation territory here. It's going to bounce. How high it's going to bounce, I don't know. I don't think it's bouncing higher than this high here at 20,000 roughly. I think we're coming down further. Look at how the 233 totally capped the run to the upside here. And down it comes. And this is a lower high to here. So it's coming down that much harder. Lower highs are brutal. Higher lows are nice. You got a higher low here, and off you go. Another higher low here, off you go. Too much too soon, so you came back down, but came down to a higher low here, and up you go. And then everything changed. That distribution at the top here. Just a lot of shares being offhanded to people that didn't necessarily know that it was distribution they were dealing with. Until all of a sudden they're holding shares saying, oh, it's going higher, everything's good. No, it's not so good. Coming down. So we're 35 minutes in, and I think I'm going to wrap it up. And if you're still sitting in the chair or still sitting watching this video, I thank you very much for doing so. I like to think that I'm providing some sort of basic information that can hopefully help. Ultimately, that's what I like to do. I like to help out if I can. That's a hell of a lot better than just taking, being a taker as opposed to a giver. Giving is much more rewarding. Anyway, I'm off topic again. That's the markets as far as I'm seeing them for today. And today is coming up on 1:15 in the morning. So we'll see what the morning brings. And I hope that whatever you're doing, you're having a good evening doing it. And you're in a good position with this market being the way it is, that you're not necessarily losing a lot of profit that you had. A lot of people are losing profit that they had. That's the way things work. But you got to hold tight. And I'm not advising anything. I'm just saying, you know, if you're in the hole, which I am, I'm going to work out of it. That's what I'm going to do at least. But hopefully you're not in the hole. And you just sit and watch and saying, wow, look at what's going on. Because it is. It's pretty hairy. And we'll see what the tariffs bring. Trade wars, I mean, all the crap that they're bringing up about, you know, what the tariffs are going to do. There was a time when this country had tariffs, and the tariffs were basically paying the way. People weren't paying income tax. Interesting how 1913, the date 1913, that's when the Fed came in, the Federal Reserve. That was a plan hatched by some very, very wealthy individuals. And you know what? They weren't necessarily thinking about the average person when they were making plans to introduce a central bank. And there have been central banks trying to be introduced in this country throughout the early history of this country. And it didn't happen. The only way that it happened with the Federal Reserve was the legislation was pushed through. It was Christmas time. And nobody was there to really assess what the plan was with the Federal Reserve and a central bank. You know, so it's like, look, how great, we got a central bank now. I don't know about that. I don't know about central banks. But once again, I'm off topic. Alrighty then. So you take care. Thanks again for stopping by, and I'll look forward to seeing you in the next one. Alright.